Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. We are in July now. Let's take a look at some end of year Bitcoin price targets for a few reasons and maybe not obvious reasons. We've slowed down quite a bit since March. So we've had this straight move up earlier in the year and then we're just sitting flat. People are asking, is the cycle over? People are nervous. People are anxious. People are bearish. That's fine. I just encourage people to have a plan going forward here for the rest of the year so you're not getting chopped up at highs or lows. So I asked Twitter, what do they think will happen end of year, higher or lower? The response at time of recording is about 68% higher, 20% lower. I actually thought we'd see more people say higher than lower, so that's a good thing. We don't want to be consensus for 300K by end of year or whatever, right? We'll look at some of the technicals for both sides of the argument. A lot of this is going to depend on a few things, including what happens in November. But just in case you're curious, other people, Fund Strat is 100K by the end of the year. Standard Charter, I think, came out today and said 100K by the end of the year. A few of these others sort of all over the place. But I think past 100K is going to take some doing by the end of the year. But there are some technical paths for that. Bitquant saying 250 by the end of the year. I just thought it was interesting to see what the AI would say. So Grok, Gemini, ChatGPT. Here's the Standard Charter, 100K target. The thing about 100K and most psychological targets, once we start rolling towards that number, much like NVIDIA to 1,000, right? Everybody's going to be thinking about that six-figure value. And it's definitely most likely going to act like a pretty important level once we get to that level. Round numbers are very important, especially adding a digit to the integer. Very important. For some people, that's going to be their sell target. And you can say the same on the way down. 50, 40, 30, equally as important on the way down. I don't have the paid version of ChatGPT and it wasn't updated past 2022. So nothing from ChatGPT on that front. So these are some of the things that we talk about on this channel quite often. But let's go through this quickly, okay? It doesn't matter. Again, what I think doesn't really matter. It's just, do you, the listener, have a plan or not? Do you care about any of this stuff or not? Or are you just saying, you know, we're post-halving. Post-halving, we're generally bullish. That's enough. That's enough, right? HODL, DCA, eventually we're moving higher. That's enough. So I would think liquidity is going to be increasing. That's going to be a tailwind. I would think rates are probably coming down before going up anytime soon. That, I would think, is a tailwind. At some point here, dollar strength is going to decrease. Now, on a relative value, that may not necessarily be the case, but depending on who's in the White House, it may be devalued on purpose in various ways. And that, to me, would be a tailwind. Now, I've got bullish goggles on. You could fill this out with bearish goggles on, and you could say, liquidity is going nowhere, rates aren't going nowhere, dollar's getting stronger. I just don't think the odds for that for the rest of the year are higher than this outlook. Regulatory risk, huge question mark, right? As we sit today, I'm assuming Trump wins the White House. Not because I'm a Republican. I'm not. I'm a lifelong Democrat, okay? Just the way things are shaping up. I think it's going to be very hard for the Dems to pull this off unless they replace Biden with the right person. So let's just assume it's a Trump White House, okay? For 5 seconds. As I throw up in my mouth, regulatory risk would be down, and that would be a significant tailwind, and I'll show some evidence for some of these points here. Geopolitical risk, I'd like to hope that the military-industrial complex would come to heel against a Trump White House. So I'd like to hope that geopolitical risk would decrease in China, in Ukraine, in Israel. So I would hope that that's a tailwind. And no matter what happens with any of this stuff, after November, uncertainty should be decreasing across the board. Now, legacy markets haven't really cared, but I'll show you why that's kind of irrelevant. You know, legacy markets are catching up to us as much as we think we are lagging legacy. Legacy has tried to play catch up all year. So overall uncertainty down, to me, would be a tailwind. Now, if we get a D instead of an R in the White House, watch out. If BTC is the Trump trade and Trump does not get elected, they might come after us with fire and brimstone and go after miners and go after AI and go after a lot of stuff that is done well. And it doesn't matter whether or not they do that. What matters is what the market thinks they will do. And that's how things will trade, right? So I'd keep that in mind. That's why a lot of people are paying attention to this point in particular right now. Technicals, we'll look at a lot of these technicals, but do I expect to have bullish technicals? As I said here now, we are neutral. So it's tough to say, right? It's an if-then statement. If greater than 65, if less than 60. So it could go both ways. Momentum as well. Momentum could go both ways pretty easily if we get out of this range. So it could be a significant headwind or a significant tailwind. It's just too early to say. And I think that's what we're seeing and feeling in the market. No one's ready to sort of stick their neck out in a big way and push this higher in the near term. Inflows, I expect inflows to be higher. Now, if I expect higher inflows, I'd expect momentum to pick up and I'd expect technicals to be more bullish. All these things kind of talk to each other, but that would be a tailwind. Why do I think inflows are going to increase? I think eventually throughout the year here, we are going to see more Wall Street inflows via wirehouses. We'll take a look at that. Main Street attention, I think, would increase no matter what happens. As long as we're out of this range, we will likely see an uptick in buyers or sellers, which again feeds into momentum, feeds into all this stuff. Q4 seasonality is typically bullish. There's also many people getting FTX money back by the end of the year. That could align nicely in Q4 with a momentum push higher on the coins, as most people would be getting back USD or USDC. I'm not exactly sure what exactly they're sending them, but it's in USD, so I think that would be a tailwind. As far as crypto products, we're probably getting an ETH ETF approved sometime this month, probably within the next 2 weeks. When that launches, I don't know, but that would be a tailwind. More products just means more regulatory clarity and certainty. As much as I don't like an ETH ETF as a Bitcoiner and that product isn't necessarily for me, it does signal that we are here to stay. We also have BTC options on the spot, ETFs that are in play yet to come. I don't really have any info on when that would be, but that'd be something to watch for. And of course, outflows and unlocks. I don't expect these to increase. So throughout the year, I'd expect this to decrease. The question is near term versus midterm versus long term, right? GOX will probably be this month or next month at the latest. If we look at the German government selling, that's probably going to be done within the next 15 weeks. So all of this doesn't take us into Q4, and the miners also probably done within the Q3 timeframe. So I would think because we'd be done by Q4, if I'm setting myself up for Q4, it's just trying to survive until Q4. I would expect this to be a tailwind. Now you could, like I said, go through this worksheet and disagree with every point. And I think you'd have valid points and much of that because that's what we're seeing in the market right now. We're not seeing a push one way or the other. We are ranging down mainly. Before we look at some other charts and info, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Something that is finding some strength recently has been Sol. It has technical evidence for bullishness. Has a inverted head and shoulders here. It's above the 4-hour cloud. So it's above some low time frame stuff. It looks pretty good on low time frames. It looks pretty good even on high time frames as it's trying to break back above the cloud. There's been a lot of chatter about, why would I be bullish BTC if we're having all these government sales and we're having GOX unlocks. GOX didn't have ETH, didn't have Sol. That is also a point to consider here. But my counterpoint would be, if you are bullish alts, you need to be bullish BTC, generally because BTC leads most of the time. Most alts are beta to BTC. Kraken Pro also added a Learn About Indicators button here. If you're curious and want to learn more about the basics of RSI, MACD, Bollinger Bands, they have a bunch of stuff they're building out here. Considering this is Teaching Tech Tuesday, nice little mini primers and explainers within Kraken Pro. So as far as liquidity, debt, what are we going to do? Does either candidate care about debt? No, They don't, right? Neither one of them has said they're coming forward with austerity. If we look at budget deficits, they are just increasingly out of control. So that doesn't appear to be getting any better. We've got the global easing cycle potentially underway here, and you can always wait for the first cut on the US side of things. You can always wait for more cuts. I still have people telling me, we're going to have a recession, cuts are bad. Okay, right? Like then crypto isn't for you. If you think we're going to have a recession, you better hope Bitcoin's recession proof, because I don't think that's the case. And it would kind of invalidate, all this stuff, right? If we are all of a sudden thrown into a deep recession, if we don't get liquidity up and rates down, then it may not matter at all where we're going, right? So an increase in central bank easing should act as a tailwind. Should, right? We don't know if it will, but it should. We can look at the central banks globally. Real rates, you could argue, are they high? Are they low? Are they where they should be? What are the inflation targets? CPI, we don't see double digits for the most part in many of these countries. Many of these countries not quite to the target, but most of them close to the target of where they want to be. And it's just something to continue to monitor. When we look at Bitcoin versus the world, historically, one of the greatest things about Bitcoin is that when it is bullish, it is more bullish than anything else on the planet. If you want a bullish asset in a bullish environment, it's Bitcoin. That's been the history since 2011, undoubtedly. Generally, it's been green, 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 red, right? And we're currently on the second potential green year. So if we do feel like there is a bullish environment, Bitcoin should outperform everything. It always has. And by the way, it's always outperformed everything on the downside. 2014 maybe being an exception there, where it was the most bearish on the year, outperformed by US equities, largely because of GOX, right? We're still dealing with that a decade later. So if we look at it today, year to date, where are we versus that spreadsheet? ETH, BTC, SOL, roughly about the same, around 40%. At one point, BTC was up 65%. At one point, SOL was up 75, 80% year to date. You can see some lead lag relationships here between BTC, ETH, and SOL. You can see the beta relationships here between SOL, BTC, and ETH. Generally, if you're bullish BTC, we generally see more bullishness in ETH and SOL, and bearishness the same. Now, obviously, what's the rest of the stuff on the bottom? It's legacy land. It's growth, it's tech, and the S&P. On the very bottom, you can't see it, but it's TLT. That's the bond, long bond ETF. It's still doing terribly. So anytime anybody says, hey, BTC, blah, 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 relative to volatility, drawdowns, show them this, okay? Like, if you want something that performs historically and does well, it's this chart and it's this chart. It speaks for itself. End of story. There's no discussion. So if you're bullish equities the rest of the year, it's hard not to be bullish BTC. Now, I know people that aren't bullish equities, right? The recessionistas. That's fine. Have a plan and execute that plan. Doesn't mean it's going to be right. Doesn't mean I'm going to be right. But I would definitely have a plan. On the regulatory front, there was this floated that, do we replace the SEC? Do we bring in somebody that's bullish crypto? That's a possibility. Maybe the most bullish possibility would be bring in a regulator who understands us and wants to be on our side versus opposition. So for technicals, for BTC, this is all I really see right now, M double top. It's possible. I don't know how probable it is. I've got bears telling me nobody's talking about this. Okay, I talk about it all day, every day. This is very real. We need to negate this. How do we negate this? Above 65, above 67, back above the cloud. And I feel better. Ultimately, it's still on the table until we're back above all-time highs. So this is very real, very concerning. And if you're bearish, this is what you want to see. You want to see this fail. You want to see us drip down lower every day. You want to see every high defeated. You want to see, when a market is unexciting, just continuous selling, which is what we've had. Non-stop selling, lower, lower, lower. So as far as TA evidence for lower, this is what it would be. Breakdown below, the cloud below 57. As far as higher, what do we want price-wise? We want to stay within the rate of change here that we've established since the post-FTX blow-up low, as well as throughout the SVB ETF journey. Most of the price action has been bound to this. We are currently sort of stuck between the 20-week and the 200-day moving average, but holding flat until the end of this pitchfork is definitely something to watch and to consider. Downside argument again being the 200-week moving average, which we haven't seen historically in a bull market period. But let's say we are sideways until October 1st. That would bring us down out of this rate of change, and that would be problematic as well. Topside targets, we can look at yearly pivots and remember those predictions from people 100K, 116, 250. I think 250 is too high. I think 166 is also realistically too high. 120 is a 2x from here. 122 would be the midpoint of the rate of change. That would be reasonable and doable. 89 would be the bear case. 89 would be us remaining in this rate of change and just continuing on for the rest of the year. So I like 89, 100, 122. Those three numbers make the most sense to me by the end of the year, assuming things are bullish. We can also look at just fibs of the range higher, the opposite of the M double top, which would be 87 to 96. And if we get to 96, we'd likely tap 100, at least briefly, maybe on a wick or something. But this is all very much an if-then statement. It is not a prediction necessarily by any means. It's if we get this momentum back, which I think we will, that's where I think we are going. So I'm positioned accordingly, right? If you don't think that, then don't position similarly. Just wait. We can also look at the long-term power law, which has 100K as the midpoint by the end of the year. So that would honestly make sense to me. Let's just maintain a level below the midpoint of the power law by the end of the year, and then into 2025, throughout 2025, then things probably get pretty crazy. As far as wirehouses go, not a lot of chatter out there, but this is one account, AP Abacus, that discusses the wirehouse stuff. Still says it's coming, says advisors are frustrated based on his sources, and they think August, maybe late August. So again, July not looking great in the near term. We of course have the German government selling, which has continued, and roughly the calculations are, I think it'll take 15 weeks for them to finish. It's great to wake up and see an on-chain coin moving every day on Twitter. Really makes me happy. Hash ribbons are another one as far as miner capitulation. 30-60 day hash rate, still very much suggestive of hash rate coming off the network. Now this whole indicator may be disrupted by miners flipping to AI, but nevertheless they're flipping to AI because it is more profitable than BTC. And then lastly, something to just always keep in mind of where is MVRV. It is below 2 on the Z-score. Historically, cycle tops have been 6 plus, 7 plus. Plenty of room to go higher. And certainly room on the downside, right? We could just drift to 0. Let's say we go back to the realized cap level on the bear side. So I'd have a plan, think about some targets, think about what the macro side of things and the crypto side of things, if you care to have an opinion. And a lot of people sort of think about this stuff from day to day, week to week, instead of month to month, quarter to quarter. And it's okay if you're not bullish. It's okay if you need more information. But I wouldn't take the opposite side of this and then trade the bullish side of the argument. It just doesn't make sense to me. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.